session. Matt Orton is with us, Chief Market Strategist at Raymond James Investment. Matt, great to have you with us here. Prashant this side. The question that actually I put out yesterday morning is that have we seen the peak as far as tariff good news goes? And if anything from here, we should expect, all the handshake deals have happened, not all, but at least the ones that the big one has happened. But now you've got to work through the details, etc. Surabhi was just telling us some war of words with regards to chip, etc. So will, this deteriorate? I mean, it's all relative in markets, right? Incrementally, is it positive or negative? Have we seen the peak in terms of good news on tariffs, in your opinion, Matt? What's your sense?
Hey, Prashant. Good morning. It's always great to join. And I think it's hard to say whether we've seen the peak with respect to good news because there's still a lot that we don't know. There's still a lot of potentially good news to come. I think it's all about the margin. Have we seen, are we going to start to decelerate from kind of the acceleration of good news while it might still be increasing? The slope of that increase might start to change or flatten. And I think that's what we're starting to approach right now, is that acceleration is slowing. And it makes sense. There's been a ton of really, really positive price action baked into global equity markets over the past 2-3 weeks, and we need to cool down. And what I tell investors is that while I'm still biased to the upside, I still think that there's a lot of negative sentiment that's being reflected in market prices. Positioning is still largely neutral. As volatility continues to come in, a lot of the algorithmic flows are going to continue to support the market, especially if we have a leg lower. That all provides some fuel for further upside, but a little bit of a pause in some of that good news might be healthy for the market to reset, consolidate, and start to build another base upon which we can continue to rally to new all-time highs.
Right. Man, just one thing. This is a bit of here and now, and I'm just taking a shot at it. Lots of tweets and social media posts, and some of them are quoting JP Morgan. I don't know if you've seen this. This is last night's 1% reversal at open. Apparently, JP Morgan is saying that retail traders bought some $4 billion worth of US stocks at open, making the largest intraday retail inflow on record. That is last night. Anything special happened last night? I mean, have you seen this?
Yeah, so when you look at the flows, retail investors have been supporting this market for a long time. Retail investors were buyers as the market was going down, even on Liberation Day, and retail investors have continued to be buyers of the market even as we've continued to make new highs. So it's not surprising to me to see these sort of strong flows. And I think it comes on the back of good news from the Middle East, more investments that are being made. And I think all of that just comes together and creates large buy orders. So I don't know if anything very special happened, except that it's been a trend for a while. And I don't expect that to abate, which is another reason why I still find it hard to be too negative on where this market ultimately goes.
And the market's been going only up, hasn't it, Matt? Hi, great to have you on the show this morning. Thanks for joining in. So, whether it's the US market or whether it's the India market, we're just 4 or maybe 5% away from the all-time high levels. So let's talk India. Now that you've seen a lot of the earnings here as well, do you think the market has the juice to keep going higher? And what would you buy? I mean, we know that you like the big banks here like ICICI, but what else looks interesting to you at this point?
Hey, Surabhi, that's a great question because I've been looking at a lot of extension themes. So the Indian market, as you know, is my largest overweight outside of the US, and that remains the case right now. Financials, banks, still an area that I like a lot. I'm encouraged by the numbers that we've had, but earnings season has been positive. It's helped support the market from that detox period we had, the painful detox period, with the 15% plus drawdown. But as I look at what's working across global markets, I think one of the things I like to lean into are long-term, durable, secular growth themes that are playing out around the world. Some of that's artificial intelligence. Some of that's with respect to a strengthening, growing consumer class, and that's particularly relevant to India. So Interglobe's been a favorite holding of mine. So looking at extensions to that, Make My Trip, that's an interesting holding as well, because you're looking at companies that are able to tap into consumer demand for travel and do so in a way that's levered towards technology to bring down overall prices. So that's one interesting name I'm looking at. Paytm 197 Communications, another name that I think looks very interesting just from a financial services fintech extension of the consumer continue to expand. Geofinancial is another name. Strong artificial intelligence backbone. A company, while it's expensive, Paytm's expensive as well. I think the market's willing to support those valuations if you deliver growth. And both of those names so far are delivering growth.
Yeah, that's very interesting. So I'm just recapping. Since you like the global AI theme, you're looking at names like Paytm and Geo Financial as an India extension. And there's Interglobe and Make My Trip. Wonder why they didn't list Make My Trip here in India. I mean, we could have had a slice of the action, but then it's only for the global investors for now. Nigel.
All right, Matt, final question before we let you go. You know, the Indian markets, I think that's been the top pick for you, the top market that you're betting on. But in the last couple of weeks, suddenly the United States and China, they managed to eke out a deal. And now you have the Chinese that are trying to pep up their economy. You know, they're cutting rates, they're trying to push in some liquidity as well. They have valuation support, but would you still back the Indian markets over the other emerging markets like China?
Yeah, Nigel, that's a great question. So while India is the largest overweight, I have been looking for other ways to diversify my portfolio because diversification has been a key theme I've been pressing to clients and that I've been trying to invest in. And so outside of India, we know the weaker dollar has helped be supportive as we see global growth kind of come back to life. Commodities are working a little bit better. So Latin America has actually been a very interesting place, especially given some of the pivots we've seen with respect to trade. Countries like Brazil are very, very interesting to me, and I think are attractively valued relative to the rest of the world. I think China is a little bit of a red herring. While you're seeing support from the government with respect to interest rates, I actually think the trade deal makes the government in a position where it can't provide the bazooka that they really need to jumpstart what I think is a deflationary spiral. It's just really hard for me to get excited about China outside of anything but being a trade, a shorter term investment vehicle, because the government's not willing to do what it needs to do to actually get the consumer going. Contrast that to India, that's not at all the case. You have a burgeoning consumer, incredibly strong support between the public and the private sector, and that's a recipe for long-term success. So India is an own, China is a trade.
Okay, all right. Thanks very much, Matt. With lots more questions, but it's the earnings season. Thankfully, we are wrapping the earnings season out, and longer interactions. Look forward to them from here on. Thank you for joining us as always. Let me